Hello, good morning. It's Friday. Happy Friday to everyone. Let's quickly confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, I will be glad and appreciate that you type in hi in the comment section so we can get this session started. So I would like to see some feedbacks in the comment section. So we should be getting started in a moment after the further confirmation on this one. Okay, so let's see what we have here in the comment section. All right. Let me read through this. I'm trying to load up my chats now. And so let's see what we have here. I'm unable to load up my chat. Okay, I can see something coming in right now. All right, good. Okay, my junior, good morning. 959. All right, thank you. 026 990. All right, okay. 623. Chopaz. All right, Chopaz says there is some echo here. Please kindly confirm that this is not anymore, because I just did some adjustment on my audio. 799, thank you. Hey Carrie, good morning to you. Thank you very much for that confirmation, please. All right, so let's kickstart the session. So I want to welcome you to another promising session on the Extreme Speed. My name is Sheriff Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. So with that being said, here it's a Friday, the last trading day of the week, and it's our culture here to be doing some rounding off on all the pairs we have been monitoring since the beginning of the week. So we shall be looking at all the pairs. We are going to be reviewing how the week started. We are going to be reviewing what actually happened, the profit we took, the loss we had, and how we want to be rounding off on these pairs for today. And before we go into the charts here, we have a high impact macroeconomic event we shall be looking forward to. As participants in the market will be making close attention in that regard. And for today, Friday 10th of February, we have two macroeconomic events, though we already have the GDP for the pounds, which happened earlier today, and in fact we had a 0.0%, which was just as expected. Then we have the Michigan publication coming up later on today. That's the Consumer Sentiment Index, and now we already have a consensus. Remember, at the beginning of the week there was no consensus here, so we already have a update in that regard. The previous data came in with 64.9, and the consensus is projecting a 65 here. So let's see what is going to be happening, and that's coming up in 4 hours from now. We want to see if it's going to be below expectation, beyond expectation, or it will be coming in just as expected. So we shall be looking forward to see how participants in this market will be anticipating this event, and obviously we shall be seeing this anticipation on the chart as price action. So with that being said, here we shall be diving right into the chart at this point in time, and let's start with where we used to normally start, and that is the US oil. On the US oil, it has been an immense profitable week for us here on the US oil. As you remember, we were able to be part of this bullish momentum as soon as price broke out of the $74.20 level, and that was on Monday morning. I think later on Monday we saw that opportunity, and since then price action has continued to find higher highs. And on the US oil, we had multiple entries. Remember, we took advantage of the breakout of the $75 level. That was second position. We also added another position at the breakout of the $75.50 level. We also added another position at the breakout of the $76.20 area, and this led into price action hitting our TP target at the $78 area with over 300 pips in profit at that particular point in time. Then on Wednesday, we also anticipated another bullish momentum here at the breakout retest of the $78 level, but the bullish momentum wasn't really that strong, as we can see here. As soon as price got into the $78.60 level, we begin to see selling pressure around that area, which lasted about 12 hours. And one thing we said about the current structure here during the live session yesterday, if you remember what I said that we should be looking forward to a breakout of the $79 level to add more position. And if the sell pressure here continues, we want to be seeing a breakdown of this bullish trend line that we identified here to negate all bullish momentum to push price to the downside. And in fact, we had the breakdown of the bullish trend line here yesterday, and price action actually moved about 180 pips in that direction before we started seeing this bullish momentum. And if you have been part of that trade, you'll definitely have taken some profit at that point. And then we saw price coming back to do a retest of the $78 area. And in fact, in the last 12-13 hours, we were actually thinking that price action is going to be doing a retest of the $78 level to incite another wave of bearish momentum. But when we look closely into that structure here, that is around the $77.80 level, in the last 10 hours, we saw our buying pressure resumed around that area, negating all attempt by the sellers to break down of that structure. And in that regard, I shared this on my public platform where I said we should be looking forward to either a breakdown of that channel to give us an opportunity to sell, or a breakout of that level to give us an opportunity to buy. And in fact, we had price action trigger our buy stop order right above the $78 level, and as you can see here, price action moved significantly in our favor to hit our TP target at the $80 level with over 200 pips in profit. Then we also added another position at the breakout of the $78.60 level, and that one also gave us about 150 pips in profit. So if you have been part of this trading journey at this particular point in time, you will definitely be in profit around this area. So going into the New York session today, what is going to be our plans? What are we expecting to do on the US oil, and how do we intend to take any trading opportunity on this one? Looking at what is happening here on the 1 hour time frame, it is very obvious that price action is at a critical point. As you can see, price is currently trading around the $80 level, which has been a very strong determinant of selling pressure on the daily time frame in the past 3 to 4 months now. So for the sake of those who are not part of our live session prior to this one, let us scale up into the daily time frame. Let's see how important the $80 level has been for us, and we shall definitely be using the structure to guide trading activities for today. So right now we are back on the daily time frame, and the first thing we observed on the daily time frame is that price action has been bearish at least in the last 7 months, and as a result of this, we were able to connect the series of lower highs here to give us that bearish trend line, as you can see here. Then what we saw at the beginning of the year was a situation where we were anticipating a bullish momentum, and we identified a structure here which looks like a double bottom structure, and we said a breakout of that double bottom structure will be a beautiful sign for us to join. And whenever we identify a technical structure like this, the next thing we want to be doing is to identify the neckline of that double bottom structure, which we shall be using to guide our bullish momentum here. And it so happens that the neckline area falls around that important key level at the $80 level. In fact, the $80 level has been a major determinant of selling pressure here since the month of November. As you can see here, though we had a demand zone around this area, but one thing about the $80 level is whenever buying pressure reaches this area, we saw attempts by the sellers to push price to the downside, negating all bullish attempts. The same thing also happened here during the first day of the month of December. We saw selling pressure resume again from that level, and throughout the month of December, price action had continued to trade below the $80 level to emphasize the strength of the sellers at this point. And the year closed around the $80 level, as you can see here. Then it resumed again at the beginning of this year with another selling pressure right below that structure to push price to the downside. So you can see that the $80 level has been a strong selling niche in this market in the last 3 to 4 months. So following the reversal pattern we identified here, that is the double bottom structure, we were expecting a breakout of that level of the neckline area, which also shares a confluence with that bearish trend line here to incite a bullish momentum. But this did not happen, unfortunately, for the buyers, as we saw that as soon as price got into the $82.50 level, we started witnessing selling pressure from that area, hereby negating all buying attempts from that structure. And in fact, the selling pressure at the $82.50 level led to a situation where price action was caught within a channel which lasted about 2 to 3 weeks before the breakdown of the channel happened during the course of last week's trading session. And as you can see here, price action broke down the support level of the channel. And what we saw here during the New York session yesterday was a significant breakout of that level. Remember, I told you that we are at a critical point at the $78 area, where we said we shall be waiting to see how price action will be reacting to that structure to decide what our next line of action will be. And with the situation of things right now, it appears the buying strength is still very strong at this point. As we can see, we saw buy pressure break out of the $78 level during the early hours of today to give us this candle that is currently running at this point. And with the candle running around this area, you can see price is currently around the $80 level at this point, a level which has been a strong selling niche in this market in the last 3 to 4 months. So at this point, we need to be very, very careful. As you know, as this level has been a strong selling niche, we could have a situation where the candle here could transition into a shooting star candle, or probably if we scale down to our lower time frame, we might likely see selling pressure negating the $80 level, evolving into a reversal pattern on our lower time frame to incite another wave of bearish momentum. So that is one possibility that could happen around this area. Another thing that could happen is price could break out of the $80 level, buy pressure above that structure to give us an opportunity to add more position to our existing trade. That is, if you are still in this current buy position we are in on the 1 hour time frame. So we are at a critical point right now, that is the $80 level. So we want to see how participants in this market will be reacting to the structure, at least in the next couple of hours, to decide what our next line of action will be. So to be able to have a better perspective into this, we shall be scaling right down to the 1 hour time frame. Look out for technical structures around this area in anticipation of either a bullish momentum or probably a reversal pattern at this point. And remember that we have a macroeconomic event coming up later on today, and that is 3-4 hours from now, the consumer sentiment index, which is a high impact event. And this is definitely going to be affecting price action as soon as prior to the event or post the event. So we want to see what is going on here, and let's see how participants, the major key players in this market, are anticipating this event. Now we shall be scaling down to the 1 hour time frame, where we begin to see things clearly around the $80 level. And right now we are back to the 1 hour time frame. So this is the 1 hour time frame here. And as you can see, price action is currently trading around the $80 level. We have a situation where the last candle here closed in the form of a shooting star candle, which is a sign that sellers are still very possible to come in at this current structure in this market. And we consider how this level has been a strong selling niche in the past, so we might likely see some reversal patterns around this area, which could come in the form of probably a double top structure or a breakdown below the $80 level, selling pressure below the $80 area to give us a retracement of that impulse leg in anticipation of another wave of bullish momentum. So this is what we shall be looking forward to here. We are going to wait out and see if the structure here will evolve into a reversal pattern to incite a selling momentum, or we could be having a trend continuation pattern around here where a bullish rectangle pattern could incite a breakout retest of structure to give us an opportunity to join the trend continuation to the upside. So in order to have a better perspective into what is really going on here, we would want to scale down to a much more lower time frame. Let's see what the structure here is saying. On the 15 minutes time frame, I really don't have anything here, so I would like to scale further down into the 5 minutes time frame where we can see things more clearly at this point. So you can see now that we have been seeing some consolidation phase around this area, which is more or less like a selling pressure from that structure. But one thing about this structure is the fact that as soon as price comes into this area, we saw buying pressure from that level. So what I'll be doing now is to bring out my line chart. Then I will connect the series of higher lows. I think I have something like this. I'll be doing some readjustment to that when we bring back our candle chart. So let's set this up first of all. Okay, so we have something like this. Okay, so we have a trend line here, and if we connect this 1 2 together, we can see we have something that looks like a flag pattern or probably a wedge. And when we have this kind of structure, it has a tendency of transitioning into a trend continuation pattern. And if we are going to be seeing a trend continuation pattern here, we want to see an engulfing candle breaking out of this trend line, followed by a retest of structure with buying pressure above this level. Then we could join that rally to the upside. So that is one scenario for buying the US oil for today. However, if we do have price action break down this level, that is the $80 level to the downside, respecting that bearish trend line, having a retest of structure followed by selling pressure below the structure, we shall be getting ready to sell the US oil with the hopes that price action will culminate at the golden zone of the previous impulse leg. So we have the previous impulse leg here, which is this one. Let me show you so that you can see what I'm talking about. So we have the previous impulse leg here. So if price breaks down the structure, we might likely see a retracement of that impulse leg, which will definitely fall within the golden zone area. And in order to get that, we want to be using our Fibonacci retracement tool, run it through the previous impulse leg here, and we should be aiming at an area between the 50 and the 78.6% of the previous impulse leg. So we should be having this area as a TP target for sellers. So I will be labeling this for the sake of clarity. So we have TP target for sellers, and at the same time this level will also be a potential buy zone if we start seeing buy pressure around that area. So I will place this right inside the box and give that box a yellow color. All right, so we no longer need the retracement tool. So what I'm saying here is this: we already have an impulsive move earlier this morning as price action moved significantly in their favor. So I said if we do have a breakdown of the structure, we might likely see a situation where price will drop into the TP target zone here, which falls within the $79 level and the $78.30 area. And if price drops into the structure, we shall be looking out for buy pressure around the zone, which could come in the form of a double bottom structure to incite the second wave of this bullish momentum. So this is what we shall be looking forward to sell the US oil. And remember, if you are not a scalper or not a counter trend trader, taking advantage of that bearish momentum below the structure might not seem appropriate for you. So I will advise, that is, if price breaks down the structure and you're not a scalper and you're not a counter trend trader, well, I would advise that you wait for the culmination of that retracement phase to happen, after which we want to be joining the second wave of that bullish momentum. So that is that on the US oil. So we can only sell when we see a breakdown of the structure, and our buying opportunity will be coming if price action breaks out of the structure, closes above this level on our lower time frame, and if possible, if we start seeing buy pressure around this area, then we want to be joining the rally to the upside. So these are my views here on the US oil. If you have any questions, feel free to drop your inquiries in the comment section, and be rest assured that I will be attending to them as soon as I cite any. So with that being said, here we shall be moving on to the next option, and the next option we shall be looking at today is the US tech. The US tech has been bearish in the last 24 hours here, and remember, we were initially in a buy position during the prior to the live session yesterday. We took advantage of this opportunity at the breakout of the 12,550. Let me quickly take you through how the week started on this one, so that we can have a better perspective into the psychology in this market for this week. So the week started with a consolidation phase initially. We remember we identified the resistance point for the week sitting at around the 12,550 level, and the support level sitting around this area. But we had some selling momentum after the breakdown retest of the structure, but the multiple rejection of the 12,400 level, which lasted about 24 hours, was a beautiful sign that sellers were not capable of breaking that structure. And as a result of that, on Tuesday we anticipated a breakout of the 12,550 level to join that bullish momentum to the upside. And in fact, we had a couple of breakouts here, and price action moved in our favor with about 220 pips in profit. And prior to our Wednesday's live session, we saw a situation where price was caught within a flat channel, that is between the 12,770, which is the resistance level for the channel, and then the support level or the channel sitting around the 12,700. And you know, from a technical standpoint, whenever we have such a flat channel like this, all we need to do is to remain patient and look out for either a breakout of the channel to give us an opportunity to buy, or a breakdown of the channel to give us an opportunity to sell. And in fact, during the New York session on Wednesday, we saw price action break down that structure, giving us an opportunity to sell. And in fact, price action moved over 200 pips in our favor before we started seeing another wave of bullish momentum gathering right around the 12,550, which led to another breakout of that resistance level one more time. So during the live session yesterday, we had the situation running where price action was currently trading around this area, and I told you that you should move your stop loss to lock in some profit. And for those who had missed out on that opportunity, I told you that we should be looking out for buying opportunity if price comes back to do a retest of the 12,550. And in fact, that did not happen here, as we saw price action break down, retest the 12,550 level to signal a bearish momentum. And I hope you are able to join that move to the downside as price action continue to trade, find lower lows and lower highs. And in fact, this led to the breakdown of the $12,400 level. Remember this important level we identified during the live session yesterday on our daily time frame, which we said is likely going to be serving as a neckline of the reversal pattern we identified on the daily time frame. Well, for the sake of clarity, I will definitely be showing you how we got to that point on the daily time frame, but let me quickly run through the review of what our expectation was yesterday before I will be doing that on the daily time frame. So we saw another opportunity to sell at the breakdown of the 12,400, and since yesterday price action has moved over 350 pips in profit at this point. So if you have been part of this profitable trade right now, well done to you guys. Congratulations. And what you want to be doing next is to move your stop loss to secure this current position that we are in right now. And for me at this point, I will be suggesting somewhere right around the 12,400 to lock in some profit here as we continue to monitor price action. Now we shall be scaling up into the daily time frame to make a decision for today, and for the sake of those who are not part of our live session prior to this one, you would also be able to see, one, how important the 12,400 level is that we identified yesterday, and at the same time be on the same page with us. Scaling up into the daily time frame, what did we see on the daily time frame? So during the live session yesterday, we identified the structure here. Let me zoom out so that we can go to as far back as last year to see what has been happening on the US tech. So throughout the course of last year's trading session, we saw the situation where price action has been bearish, and as a result of this, we connected the series of lower highs here to give us that resultant bearish trend line that you can see on your screen right now. However, in the month of June, as soon as price got into the 11,000 area, we saw a situation where buyers continue to negate all attempt by the sellers to break price further to the downside. And in fact, this buy pressure we noticed around the 11,000 area finally became successful, as we saw the bullish momentum triggered here at the beginning of the year do a final breakout of that bearish trend line to further tell us that the trend line is no longer strong to hold bearish momentum. And since the breakout of that trend line, price has continued to find higher highs. Now it got a little bit interesting as soon as price tested the 12,900 level during the course of last week's trading session, and as soon as price tested the 12,900, what did we notice? We noticed some selling pressure resume around that area. And if we go to as far back as the month of March, you can see how the 12,900 level has been a major determinant of price action. In fact, it has been more of selling around that area, as you can see. Since the breakdown of the structure here in the month of April, price had continued to retest that structure to continue to emphasize the strength of the sellers. Though we had a breakout here in the month of August, but before the end of that month, price action broke down, retest again in the month of September, and since then price has been trading below the 12,900. Now, if we zoom into the current structure here, you can see the same thing has also happened here. As soon as price got into the 12,900, we saw sharp rejection of that structure, leading into a situation where price was caught within a channel, hereby emphasizing the indecision in this market at this point. And you know, whenever we have an indecision like this, we all need to be patient to look out for a breakout or breakdown to give us an opportunity to sell. And one thing I told you during the live session, if you remember very well, I told you that the tendency of this current structure might likely transition into a reversal pattern that will finally break down the $12,400 level, which is the neckline of that reversal pattern, to push price to the downside. And this is exactly what happened during the New York session yesterday. We saw the breakdown of the 12,400, breaking down that structure to incite a sell-off in this market. And from a technical standpoint, what I'm looking at here, price might likely drop to as far as the 12,100 or the 12,000 or the 11,700. Even it could drop to as far as this trend line here. And you know, from a technical standpoint, whenever we have a breakout of a structure, there is a likelihood that price will drop to as far as retesting that structure one more time to incite another wave of bullish momentum. And with the current situation we have here, we're already in the sell position we took advantage of here, and we have secure this current position to protect ourselves from any sudden pullback that might happen here. So the next question now is, how far will this retracement phase go? Is it going to go to as far as the $12,100 level before buy pressure will come in? Or is it going to go to as far as 11,700 before it does? Or as far as this bearish trend line before we start seeing another wave of bullish momentum? So this is what we shall be looking at during the live session today. Now, if we connect the series of higher lows here, considering our price action has been finding higher lows since the beginning of the year, this is what we can see at this point. So we have a bullish trend line right now. Let's see this. and price action is currently trading above or around that bullish trend line at this point. So we are at a critical point right now where we want to see how price action will be reacting to this level for us to know if we want to be adding more position to our sell trade, or we want to be getting ready to join that decline, that rally to the upside. So we shall be looking forward to see if we are going to be seeing a buy pressure around this area, which is around the 12,250 level. So we shall be focusing on that level on our lower time frame for a bullish momentum, and if the contrary happens, when price breaks down the trend line, selling pressure below that structure, we shall be looking out for selling opportunities. So in that regard, I will be scaling down to the 4 hours time frame. So let's watch out for this current situation around the 12,250 level to see how price action will be reacting to that level. So let's go to the 4 hours time frame here and look at what we have on the 4 hours time frame. That's the bullish trend line which we just identified on the daily time frame. Hold on a second, let me redraw the trend line so that we can have hold on a second please. So I will be bringing out my line chart so that we can have specific points of connection. So we have the trend line here, so I will give it a 2 pixel to emphasize the importance of that trend line, and then we go back to our 4 hours time frame. So this is the 4 hours time frame here, and we are going to emphasize the 12,250 level which we identified earlier. So this is the 12,250 level here. Hold on a second, let's confirm if it's true. Okay, and let's relabel this for the sake of clarity. So we have the 12,250 level sitting around this level. So you would agree with me, we are at a very critical point right now. We are at a level 12,250 which shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of this year. So we want to see how price action is going to react to this level to decide if we are going to be adding more position to our sell trade, or we want to be getting ready to join a bullish momentum at this point. So what we are going to be looking forward to here is if we start seeing buy pressure around this area, then we might likely be seeing a situation where price action will be respecting that bullish trend line one more time to incite another wave of bullish momentum. But if price action breaks down the 12,250 level, a level which also shares a confluence with that bullish trend line, selling pressure below the structure will be a beautiful opportunity to add more position to our existing trade. So if you had missed out on all the sell positions we took advantage of in the last 24 hours, at this point in time, I would advise you to remain patient here, and let's see how price action will be reacting to the 12,250 level, which shares a confluence with that bullish trend line to decide what our next line of action will be. So it could be a buy pressure around that area to incite a bullish momentum, or it could be a breakdown of that level to incite a bearish momentum. So for those who are already in this trade, move your stop loss, lock in some profit, secure this current position as we continue to monitor how price action will react to this level. And if you're not comfortable with this current structure, you might just decide not to take any trade anymore for today, for this week, as this is the last trading day of the week. But if you really do want to take advantage of this opportunity, and then you just need to be patient, this could last about 2, 3, 4 hours maybe, or it could happen around the time close to the macroeconomic event we are anticipating, that is the consumer sentiment index. So these are my views here on the US tech. So let's remain patient to watch out for how price action reacts to that level to decide our next line of action. If you have any questions, feel free to drop your inquiries in the comment section. I will be checking the comment section from time to time. I can see Steamroller. Good, happy Friday to you too. How is work today? All right, so moving on to the next pair. The next pair we are going to be looking at this morning is the GBPUSD. So on the GBPUSD, what was our expectation during the live session yesterday, and even how did the week start on the GBPUSD? So we had a situation on the GBPUSD 1 hour time frame here. The week started at around the 1.20650 level, which was initially our resistant level. So the week started on a bearish note as we saw bearish momentum take over this market, and we saw how this level was rejecting all buying attempts. Then we also had a support level for the week sitting at around the 1.20300 level. Now, whenever we have this kind of structure, we want to see a breakout or breakdown of that structure to give us an opportunity to either buy or sell. And what happened on Monday, later on Monday, was the breakdown of the structure to give us a signal to sell. At this point, price action climbed back up again to do a retest of that structure, but fortunately, it moved in our favor one more time and moved about 60-70 pips in our direction before this bullish momentum started. And during the Tuesday live session, we identified this buy pressure here, and we said if price action breaks out of the 1.20300 and the 1.20400 level, we want to be buying the GBPUSD. So we saw the breakout of that structure, and in fact price action came back to do retest of this level, in fact multiple times, to give us an opportunity to add more position to our existing trade. Then on that same Wednesday, we had the situation here where selling pressure resumed again around the 1.2100 level. Price action came back into the 1.20650 level by pressure around this area, respecting that trend line one more time to give us a signal of a bullish momentum. And in fact, we were part of this buy position as it broke out of the 1.2100 level. That was on Thursday morning, and price action moved about 90 pips in our direction. Breakout of the 1.21500 yesterday as well. We had another position. That one also moved about, I think about 50 pips in our direction before this bearish momentum took us out of all the buy positions we had there. So we had about 60 pips thereabout on the GBPUSD on that buy position there, and we now have a beautiful signal now where price action appears to have broken down that bullish trend line, which is happening for the first time this week. Remember, this bullish trend line has been guiding bullish momentum since the beginning of this week, and now that we have seen a breakdown of that trend line, this is a beautiful sign that the trend line may no longer have the capacity to continue to hold bullish momentum. And in that regard, we need further confirmations for this, and this should definitely come in the form of a retest of that trend line. So whenever we have a breakdown of a structure like this, we expect that price will come back to a retest of that structure to incite another wave of bearish momentum. And this is exactly what has happened here in the last couple of hours. Price action appeared to have come to retest that structure, and for me at this point, I will be suggesting that we'll be selling the GBPUSD right below the 1.2100 level. So if we are having a sell position open at this point, it's still very, very okay. So let's hope that price action will continue to drop further to the downside from this level. To buy the GBPUSD will not be something we shall be doing here unless price action breaks back above the 1.21500 level here to incite another wave of bullish momentum. So for us for today, what we are going to be looking forward to on the GBPUSD is to sell right below the 1.2100 level and buy above the 1.21500 area. So let's continue to hope that the selling pressure will continue right below the structure, and if it does so, we shall be glad to continue to be in that position, and at the same time look forward to more opportunities to add more position to our existing trade. And talking about adding up more position to our existing trade, we shall be using the 1.210650 level as another juncture to join if price action does break down, retest that level to the downside. So let's be on standby to catch this move when they finally happen as we continue to monitor price action. So those are my views there on the GBPUSD for today. I hope I'm clear enough, and if I'm not, Feel free to drop your inquiries in the comment section, and I will be willing to be of help. Somebody says that is hearing double voices. Can someone please confirm that this is true? Because from my monitoring device here, I'm not experiencing such. I will want to advise you to probably refresh your app. You can close your app and restart it all over again so that you can have a better audio quality. So someone just commented now that the audio is fine, so I think it's from your hand 398. So try to shut down your app and restart it all over again, okay? And let us know if it's fine. All right. All right, so in the absence of no questions, let's move on to the next pair. So the next pair we are going to be looking at today is the XAUUSD, and on the XAUUSD we had a quite profitable situation here, and I will quickly run you through what we were looking at the beginning of the week. So the situation on the XAUUSD was quite choppy here, as we really did not have any significant profit per se here, as every position we were taking out of that position after securing every position we were in. And this is evident after looking at what has been happening here. You can see that price has been a little bit choppy, doing a huge consolidation phase right around that pink line you can see on your screen. So I have a channel here, something like an ascending channel, where this is serving as a resistance point of the ascending channel, and this other one here is serving as the support level of this ascending channel. So it has been a huge indecision in this market in the last 1 week, and in fact I know participants are looking forward to a macroeconomic event that will be driving price movement, and we have one coming up today, like I told you, and we shall be seeing some potential opportunity, and appears we already seen some signals in that regard. And during the live session yesterday, what were we expecting, and where were we during the live session yesterday? So during the live session yesterday, we were around here at the $1,886.50 level, where I said if you had missed out the buy position at the 1,880, that you want to be patient enough to see price action break out, retest the 1,8865 level to join that rally to the upside. And in fact, we saw a breakout of that structure, and as soon as price was triggered, we were taken out immediately after we saw this bearish momentum that took us out of all the buy positions we had. So the first position closed with about 200 pips thereabout, and the second position closed in a loss, which is okay. And I told you yesterday that I wouldn't be selling the XAUUSD unless I see price action break down the 1,875 level, which is exactly what happened during the New York session yesterday, as we saw the breakdown of that structure retest a couple of times to confirm a selling momentum. And since then, price action moved about how many pips? That is over 2,000 pips, over 2,100 pips in our favor, before we started seeing this bullish momentum that's happening here in the last 5 to 6 hours. And for those who have been part of this position here, that is the sell position below the 1,875, kudos to you guys, as you would have been in profit at least probably 1,800, whatever it is, before we were taken out of that position at this point. And what are we going to be planning to do going into the New York session today, and taking into consideration the fact that we are looking forward to the consumer sentiment index? And one thing there is this: we begin to see some traces in the market of where price action is likely going, as we finally saw the breakdown of that channel. And you know, whenever we have a breakdown of a structure, we want to see price action do a retest of that structure to incite another wave of bearish momentum, and everything is lining up in this direction at this point. But I wouldn't want us to jump into conclusion here yet, considering the fact that the 1,860 had been a strong buying niche in the past. So for the sake of this session, let's quickly run through the daily time frame here. I want us to see things more clearly before I jump back into this one. So on the daily time frame, I will be showing you how important the 1,860 level is. And here we are on the 1 hour time, on the daily time frame rather. So we're on the daily time frame here. And if you look at what has been happening here in the last 3 to 4 months, price action has been bullish, and as a result of this one, we had this bullish trend line that you can see on your screen right now. And since the beginning of this year, price action has been trading above that bullish trend line to emphasize the strength of the buyers at this juncture in this market. So this is what we saw at the beginning of the year. We saw our price action broke out of the 1,820 level, respecting that bullish trend line one more time, and price action continued to find higher highs, breaking out of structures like the 1,860, $1,900 level before we saw this consolidation phase that lasted about 2 to 3 weeks before the breakdown of that support level happened here last week. And the breakdown of that support level saw price action drop back into the 1,860 level. That is the level I was showing you on the 1 hour time frame, which I said I needed to show you so that you can see the importance of the structure based on this current level. Now look at the structure here, the 1,860. It's also, we have a structure around here that was broken. Price action appeared to have come back within that level, and since the beginning of the week we have been seeing some buy pressure right above that level. And if we go a little step further, we can see that the 1,860 level also shares a beautiful confluence with that bullish trend line that has been holding buy pressure in the last 4 months. So with this kind of situation here, we are at a critical point here where price action could go either way, and we could have a situation where the buy pressure around this area could transition into a reversal pattern that will incite another wave of bullish momentum. That is one scenario, and at the same time, this consolidation phase here could transition into a trend continuation pattern where a breakdown retest of the 1,860 level will be welcoming a sell position at this point. So with this in view, what are we going to be doing? What are our expectations on this one? How do we want to take advantage of a trading opportunity? Well, taking advantage of any trading opportunity here revolves around the 1,860 level, as we want to see how price action will be reacting to the 1,860 level to decide what our next line of action will be. So we shall be scaling back down to the 1 hour time frame, and let's see how price action has been reacting to that level since we saw the shooting star candle that happened during yesterday's trading session here. So if we cite a breakdown of the 1,860 on the lower time frame, I am of the opinion that we should be thinking of selling the XAUUSD. So in that regard, we shall be scaling back down into the 1 hour time frame, where we shall be dissecting what is happening around the 1,860 to decide what our next line of action will be for today. So now if we bring back our 1 hour time frame right now, this is it right here. And like I said, since the beginning of the week, we have been witnessing a situation where price action has been caught within a consolidation phase, and this is the 1,860 level, as you can see here. Now we had a little breakdown of that structure during the early hours of today to give us a sign that sellers still have the potential of breaking down that structure. However, we saw bullish momentum climb back above that level. We have seen some level of buying pressure above the 1,860 level, which might likely lead to a temporary bullish momentum, probably bringing price back into the structure where a selling opportunity will send price crashing further to the downside. So for the XAUUSD for today, I will be looking forward to selling opportunities, and where are we going to be looking out for the selling opportunities? So the first one is the 1,875 and the 1,880 level. Remember, the 1,880 level is the resistance point at the beginning of the week here, so we still have it here, sharing a confluence with that trend line which has been guiding bullish momentum since the beginning of this year. So if it so happens that the bullish pressure here resumes, it will be a counter trend opportunity. If you are a counter trend trader, you might want to join that move, but if you are a long-term trader like me, I would suggest we hold on, wait for price action to come back into either the 1,875 and the 1,880 level for selling opportunities. And what do we want to be seeing when price action gets to that level for us to sell? Well, as soon as price gets into the structure, we want to see something like a sharp rejection of that zone, or probably price action transition into a reversal pattern like a double top structure or a head and shoulder pattern, whichever case may be, right on our lower time frame, breakdown retest, then we want to be joining that decline to the downside. Then if a further breakdown of the 1860 level happens, we want to be adding more position to our existing trade. So that is the first scenario I'm looking forward to sell. So if price continues to the upside here, we shall be waiting at the bust up around the 1875 and the 1880 level to sell the XAUUSD, since it shares a confluence with the breakdown of that structure that we had here yesterday. And you know, from a technical standpoint, whenever we have a breakdown of structure, there is a likelihood that price will come back to do a retest of that level to incite another wave of bearish momentum. So I will be looking forward to that area if price action climbs to the upside. And at the same time, on this one, I have a sell stop order sitting right below the 1860. As you can see, we already have a breakdown of the structure, which is going to be the first time we having a breakdown of the 1860 level since the beginning of this week. And with the breakdown here that happened during the early hours of today, it's a beautiful sign that sellers have a tendency of breaking that 1860. So having a sell stop order below the structure prior to the macroeconomic event is more reasonable at this point, as we look forward to selling opportunities below that structure. So this simply means that if price does not climb to the upside here and instead it drops to the downside, we are going to be waiting to catch that move right below the structure. And for those who are still in the sell position we are in right now, though I've been taken out of this position, but if you are still in this trade, kindly move your stop loss to break even area while we continue to monitor price action at this point. If you do have any questions, feel free to drop your inquiries in the comment section, and let's see how I can be of help. I can see 224 saying double voice. That's the second person saying double voice there. Like I said earlier, try to switch off your app and then switch it on back again, so that you can have a good audio quality, because from my monitoring device here, everything sounds very good from my point. Stimula just confirmed that it's fine, so please kindly switch off your app and re-on it all over again, and I assure you have an audio quality that is good. Okay. All right, so in the absence of no questions, I will be moving on to the last pair for today, and that is the USDJPY. And on the USDJPY, you can see what we have here. Price has been very choppy as well on the USDJPY, as price action has been caught within the 131.600 level since Tuesday, and the support level at the 130.600. So it's a quite choppy scenario we have here in the last 72 hours on the USDJPY, which further emphasizes the indecision in this market. And you know, from a technical standpoint, whenever we have such a structure like this, we have no other choice than to remain patient and wait out for price action to either break out of that structure to the upside for giving us opportunity to buy, that is break out of the 131.600 level for an opportunity to buy, or a breakdown of the 130.600 level for an opportunity to sell. And we already had the breakdown during the early hours of today, which triggered our sell position, and as soon as price moved in our favor, price action moved about 80 pips in our favor, I had to move our stop loss to break even to protect our position against any sudden pullback, and that was exactly what happened here. Price action climbed back up, taking us out of all the positions that we are in right now. So right now price is back within that channel again, so we have no other choice than to wait out and see how price action where price action will be going in the form of a breakout or breakdown of this channel. So we want to see price action either break down this channel to the downside for an opportunity to sell, or a breakout of the 131.600 level for an opportunity to buy. Before I close this one on the USDJPY, I want us to look at the daily time frame so that we can have an holistic view of what we have here. Okay, I can see my Gigi, is it? I don't know if I'm always pronouncing your name correctly. I'm sorry if I didn't. Miyagigi, all right. I've got position in buy from 1,884. Do you think I should close them? 1,884? Is that USDJPY? I'm not sure that is USDJPY. I'm not sure. Is that USDJPY or 1,884? Oh, that should be gold, right? Okay. She says 1,884. Where is 1,884 here? Let's look at it together. So we have 1,884 somewhere around here. And you said you are in a buy position. Uh-oh, come on. No. That means you never had a stop loss on your position, right? That's what that means. Please, I always mention that it's always good that whenever you trigger in a position, ensure that you have your stop loss in place, so that this protects you against any pullback. It protects you against any risk of losing more money when price action moves against you. You see, when you have money in your account, you have an opportunity to take trade the second day. So if you lose this one, you have an opportunity to take a trade the next day. But if you lose everything in your account, how do you have money? You don't have money to take a very good position whenever a new position is identified. So yesterday I made mention of something here around the 1,880 level. Here I said if we are going to be buying above the 1,880 level, if price action moves in our favor, we move our stop loss accordingly to lock in some profit. And as soon as we had a triggered position around the 1,880 here, price action moved about, let's see how many pips was that, moved about 700 pips in our favor. We moved our stop loss accordingly, locking some profit, and we were taken out of that position. The only issue I will have here is the second position at the 1,866.50 level, where the position was triggered and we were taken out with a loss on that one because we didn't have any time to move our stop loss accordingly on this one. And remember, I told you yesterday that whenever price action breaks down the 1,875 level, we want to be looking out for selling opportunity. So at the point price action at breaking down the 1,875, our buy position should definitely be negated at that point. So there is no point you being in a buy position as soon as price broke down the 1,875. So please, I'm not sure why this is so. I don't know if price will get to that far, but we are looking forward to a situation here that if the buy pressure here continues, then we might likely see a situation where price will come back to either the 1,875 or the 1,880 level, where I said we want to be looking out for selling opportunities to join that decline to the downside. So the maximum point I can project here from this current structure is that price might likely get back into the 1,875 or the 1,880 before another new wave of selling momentum will come in this market. That is a possibility that we are putting into consideration while planning for today. And another thing here is if a breakdown of the 1,860 level happens, we want to be selling. So these are my views here on the XAUUSD. We cannot guarantee that price will get this far, but if it goes that far, we want to be looking out for selling opportunity around this area to join that decline to the downside. I hope I made myself very clear. Miyagi. I'm not sure I pronounced your name correctly there. Okay, all right, you're welcome. So always ensure that you have your stop loss whenever you have a position running, and you can risk as little as 1% of your account size on each trade, or 2% of your account size on each trade. And if you get stopped out, then you still have some funds to be able to take better trades in the future. Okay, all right, so going back into the USDJPY here, like I said, price action is back within that channel between the 131.600 level and the 130.600 area. So at this point in time, we want to remain patient to wait for a breakdown to join a sell position, or a breakout of the 131.600 level to join a buy position. Then I also said I want us to look at the daily time frame together to see how price action has been evolving in the last 4 to 5 days to see if we are really on track to catch any trading opportunity here. And one thing we observed at the beginning of the week is that price action had been within a 131.00 level and 127.00 area since on the 12th of January. As we can see, the consolidation phase around this area. The same thing also happened here in the month of April stroke the month of May. We saw a consolidation phase around here before the breakout retest of the 131.00 level happened. And one thing about this situation here at the beginning of the week was that we saw the situation here where price had been caught within a consolidation phase, and during the phase here we saw our price action had been finding higher lows with a beautiful sign that we might be having a bullish momentum. And to further emphasize the potential of a bullish momentum here, we identified a reversal pattern after taking into consideration the impulsive move that brought price back into the 127.00 level, and we saw something that looks more like a double bottom structure, which from a technical standpoint is a strong reversal pattern. And you know, whenever we have a double bottom structure like this, the next thing we want to be doing is to identify the neckline of that structure, which we shall be using to guide trading activity. So for this reversal pattern to be mature, we want to see price action break out of the neckline area at the 131.00 level by pressure above that level for us to join another wave of bullish momentum. And since the beginning of the week, we were part of this buy position as we saw price break out of the 131 level and move to as far as the 133.00 area before we saw the sell pressure that brought price back into the neckline of that reversal pattern. So with the current situation here, it still seems more likely that we might be having a bullish momentum on the USDJPY as we continue to see buy pressure rejecting that 131.00 level. So if we scale back down to our 1 hour time frame and look at this channel here, we should be tending towards a buy stop order right above the 131.700 level to join a bullish momentum to the upside if we do have a breakout of that structure. So now if we scale back down to our 1 hour time frame, we begin to see that consolidation phase clearly, which I shed more light on this earlier today. And this is the consolidation phase we saw on the daily time frame, and that is between the 131.600 level and the 130.600 area. So the 131 level is the key level we identified on the daily time frame, where we said we have been seeing buying pressure from that level. So I'm of the opinion that breaking out of the 131.600 is very, very likely today. So we should be having a buy stop sitting above that level so that we can take advantage of that move when it happens. And if it so happens that a breakdown of the 130.600, what can we do? We cannot argue against the structure. We just need to heed accordingly. So these are my views here on the USDJPY. If you have any questions, feel free to drop your inquiry in the comment section as usual. And before we drop the curtain for today, let's do a recap of all we talked about today so that we can be on the same page, and especially for those who are not part of the beginning of the live session, so you can have an hint into what our expectations and plans are for today. I think I have some comments in the comment section here. All right, please be careful, Miyagigi. All right, ensure you always have your stop loss every single time you have your position triggered. It's okay if you lose. It's okay. It's part of the trade. It's part of the business to lose money. We lose money to make money. So if you have your stop loss, you can risk 1% of your account, 2% of your account, 3% of your account maybe, and then have your position run. If it takes you out, get ready for another position again. It's okay when we lose, but when we make money, we ensure that we make at least times 3, times 4 of whatever we have lost. I wish you best of luck on that, Miyagigi. Then Steamroller here says, so kind of you for going into details to explain things for us. Questions, always love you. You're welcome. It has been an honor. I can see Absis here. You're welcome, Absis. God bless you too. And 389 says hi. All right, so in the absence of no questions, I want to take you through what we talked about today before we drop the curtain for today. So the first commodity we talked about today is the US oil, and on the US oil we have been on a very interesting position since the beginning of the week. Remember, we took advantage of this buy position right above the $74.20 level, and we rode the move all the way up into the $80 level, as you can see here. And during the live session today, we saw the situation around the $80 level, and I told you that we need to monitor how price action will be reacting to the $80 level to decide what our next line of action will be. And in fact, we begin to see certain pressure around this area, and in order to make our trading easy for the New York session today, I was able to identify a simple setup for us on the 5 minutes time frame, and this is what we saw on the 5 minutes time frame. And one thing I told you here is that we shall be using the structure here to guide trading activity. So I said if a breakdown of the support level of this area happens, we want to be joining a decline to the downside. But one thing about this current structure here is that we want to see price action do a retest of this level, then we look out for that to join that decline to the downside. But if you do have a sell stop order right below that level already, and you already have your position triggered, it's okay. Just have your stop loss somewhere right above the $80.350 level here to protect your position against any sudden pullback here. So if you lose that one, it's okay. We have been profitable since the beginning of the week. So if you lose like 1% against over a 10% account, profit you have made so far for this week is not that significant to affect you emotionally. So we continue to look out for selling pressure, as we already have a bearish signal right now breaking down the $79.97 level here. So we continue to look out for selling pressure below that level. And in fact, with the new structure we have here, let me readjust this trend line so that it can take into consideration the latest setup on this one. 5 minutes time frame are always changing very drastically, so we need to always update the structures as soon as we see changes. So we have a trend line here. So to guide our trading activity for today, we have this bearish trend line to continue to guide the sell momentum. So even if price action comes back into this entry point, as long as it remains below this trend line, we continue to look out for selling opportunities below that structure to add more position to the downside. However, if price action breaks out of the trend line, then this might likely be an opportunity to join that rally to the upside. So let's be on standby for this one, and best of luck in that regard. When we went on to talk about the US tech for today, and it has been a profitable week for us on the US tech as well, as we had some buy positions at the beginning of the week, which we took advantage of at the breakout of the 12,550, and that gave us about 200 pips thereabout. Then we also had a sell position below the 12,770 after breaking down that channel, which gave us about 220 pips also on that one. Then we also had this position running prior to the live session yesterday, but we were taken out with some profit though, and then we saw price action break down the structures, break down the 12,550, break down the 12,400, and we are in for another wave of bearish momentum. So at this point in time, we have a situation where price was initially trading along this trend line here, and we said if a breakdown of the 12,250 level happens, we want to be adding more position to our existing trade here. And if it so happens that the 12,250 transitions into some reversal pattern here, we might likely see a situation where price will come back into the 12,350 level, or this trend line here. We are selling pressure below the structure will give us an opportunity to add more position to our existing trade. And then a further breakdown of the 12,250 will be giving us more opportunity to add more position herein. So you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. Then we went on to talk about the GBPUSD as well, where I told you that I'm looking forward to a selling opportunity here on the GBPUSD after citing the breakdown of that bullish trend line. Remember, we had this bullish trend line figured out yesterday, and this trend line has been holding by pressure since the beginning of the week, and not until the New York session yesterday when we saw, during the early hours of today when we saw the final breakdown of that level for the first time this week. And from a technical standpoint, we have a situation that lines up with a bearish momentum, as after the breakdown happens, we saw price action come back to do a retest of structure, and it appears price is going further to the downside. So what I said here is that we should have our sell stop order right below the 1.210 level, looking forward to price action taking us through, and if a further breakdown of the 1.20650 level happens, we want to be adding more position here. And there is a catch to this current structure, which I said if the selling opportunity is not what happened, and instead price action continue to find higher highs, a breakout of the 1.2150 level will be giving us an opportunity to buy. So let's be on standby to catch either of these opportunities as we continue to monitor price action. Then we went on to talk about the XAUUSD, which we already have a sell position running. I told you I was taken out of this position, but if you are still in that position, I have told you to move your stop loss to lock in some profit at this point. So since we already have a breakdown of this channel, this is a beautiful signal that a bearish momentum is very, very possible at this point. Remember, we have been within a choppy situation here since the beginning of the week, and it's more or less a sign that participants are looking forward to a catalyst that will be driving price action. And whenever we have a huge consolidation phase like this, whenever the breakout of that phase happens, it's always massive. So we want to be on standby to catch this move when they finally happen. So we had this position triggered yesterday at the breakdown of the 1,875, where price action moved over 2,100 pips in our favor before we saw this bullish momentum come in here. And one thing about this bullish momentum that came in here is looking to me more like a retracement phase of that previous impulse leg, as we can see price retest the support level of this ascending channel that you can see here. So if it so happens that this retest holds, then we might likely see price action break down the 1,860 level to the downside. So you should be having a sell stop order right below that structure to be able to catch that move when it finally happens. There's another situation I stated here that if that does not happen and instead buy pressure here continues, then we might likely see a situation where price comes within the zone around the 1,880 and the 1,875 level, where it's going to be a beautiful bust up for us to get ready to join the trend continuation to the downside. So I'm tending towards a bearish momentum on the XAUUSD, so let's be on standby to catch these opportunities when they finally happens. Then we went on to close the day with the USDJPY, and on the USDJPY we also had a choppy situation here since the beginning of the week, as price action had been caught within a channel around the 131.600 level and the 130.600 area to further emphasize the decision in this market. And when we looked at the daily time frame, it was looking a little bit bullish for us, as we saw a reversal pattern. We saw the breakout of the neckline of the reversal pattern. Let me quickly show you that for the sake of clarity. So this is the daily time frame here, and we identified a reversal pattern within the 131.00 level and the 127.00 area after considering this bearish momentum here. So we had something that looked more like a double bottom structure, and you know, from a technical standpoint, we want to be having a neckline, and it fell around the 131.00 level, where we already had a breakout of that structure at the beginning of the week. Price action has come back to retest the 131.00 level, and since the beginning of this week we have been seeing multiple rejection of that level to further emphasize the possibilities that buyers are still very strong at this point. So when we scale down to our lower time frame, I showed you how we want to be taking advantage of that bullish momentum if it so happens, and what we want to be seeing is price action breaking out of the channel at the 131.600 level to give us a confirmation of the bullish momentum. You know, from a technical standpoint, whenever we have a flat channel like this, we want to see a breakout of that structure to give us an opportunity to either buy or sell. So a breakdown of the structure will be giving us an opportunity opportunity to sell, and the breakout of the 131.600 will be giving us an opportunity to buy. And please, as soon as price moves in your favor, kindly move your stop loss accordingly to secure your current position. Once price moves significantly in your favor, ensure you move your stop loss to secure your position. Then you continue to watch price action, and if an opportunity to add more position comes in, then you can take advantage of it again. So on this note, I want to call it a day here, and it has been a wonderful moment with you guys. I really appreciate your attention, and I hope we were able to equip ourselves with some knowledge, as I was able to simulate all the possible scenarios that are likely going to be happening on all the commodities and pairs we are going to be looking forward to during the New York session today. And do not forget that we have a macroeconomic coming up in an hour 30 minutes from now. Ensure your stop loss is moved accordingly, lock in some profit, and then let's see how price action reacts with the current structures we identified during the live session today. Thank you very much for being around. I wish you best of luck today, and I also wish you a merry and happy weekend, and I look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, and let's come here again to review and get prepared for the new week. Do have a wonderful evening. Bye bye.